Hi grade 11s, this is Mr. Chauke. For this morning's session, we're going to be looking at the exam paper that was written in November 2020 in Gauteng. I'm going to specifically be focusing on the income statement and some notes to the balance sheet, and we have to do this within 42 minutes. So what I'm going to do, I'll just be giving you some tips and also explaining some measures that you can take to solve some of the most difficult transactions. Now, the first thing that you do when you do an income statement, we know that you have to know the format by heart. We know that you have to start by entering the things that are made available to you on the trial balance. So if you can check here, our income statement is divided into two parts: the balance sheet section and the nominal section. Balance sheet section is mostly used to prepare for the balance sheet, and then or the notes to the balance sheet also, and then the nominal section is used to prepare for the income statement. So most of the things that we are going to be focusing on will be coming from the nominal section, because remember, it includes our incomes and expenses for the year. So now we are going to start by trying to insert these things according to the format of the income statement. According to here, the sales that were given, which has already subtracted that has allowance, is 337,600. So we're going to have our sales here as 337,600, and we go to our cost of sales. Once you are done with this, please make sure that you tick these items so that you don't forget. Cost of sales, it's a question mark, so we'll come back to it. Repairs, 1,618. I believe we can see that it has already been entered for us, so there's no need to enter it. Next, we have bad debts for 1,510. We can check if it's there. Bad debts is there, but it has already been adjusted, probably maybe because there's an adjustment that affects it. But I think here, let me just check something. I think they've okay, let me not say anything. Yeah, but let's just continue. We remember these things are already entered for you. If there's any mistake, it's their business, not our business. Okay, why don't you just enter what you are given? And then next we have so bad debts have already been entered. We have telephone 2,350. Let's check if it's already there. Telephone 2,350 is there, so no need for us to stress about it. And then from there we have rent income 17,836. Let's check if it's there. It's here, so no need for us to enter it. And then next we have interest on fixed deposit 1,125. Is it there? Definitely there, so we need to go to adjustment. Next we have 2,850 on the rates, so let's check if our rates have been entered for us. Our rates here 2,850 entered. And then next we have 4,120 for insurance. Let's check if it has been entered. Insurance 4,125. And then next we have discount received of 600. Let's check if it's there. Discount received 600 is there. Next we have packing material 13,500. Let's check if it has been entered for us. Here it is. Okay, they have not entered it for us. We can enter it. And then next we have water and electricity 4,830. We can already enter it if it has not been recorded for us. Okay, here it is. Next we have salaries 78,000, so we can also, okay, it has been recorded, no need for us to continue with it. Next we have UIF contributions 3,120. It has already been entered for us. Then we can check other things that remain. Okay, then from there we are left with the adjustments. With this lesson I'm going to move a bit quickly. If you don't understand, leave your questions on the description of on the comment section of this video. I'll be happy to respond to your questions, but for now let's move as people who want to finish the exam. So now here they're saying that a credit note for 1,600 issued to a debtor dated 27 June 2020 was not recorded, meaning that it was not included in our books, and they're saying that the cost price of this goods was 1,000. The goods were placed back into the stock. So now what is happening? Remember grade 11s, I told you that every time a debtor returns things, we have four things being affected. Okay, we have two accounts affected by the cost price, which is your cost of sales and also your trading stock. And then we also have two accounts affected by the selling price, which is your debtors allowance and debtors control. So in this case, you remember that we don't have cost of sales, so we have to use the sales and also the markup information to get our cost of sales, because there's no way we can subtract this 1000 from the cost of sales that is unknown. So at the moment we'll just update on our sales and the task control. But remember, if that information that you are given has everything, then you can then update. Just remember that here for account, you're going to debit trading stock, you're going to credit cost of sales, and then you're also going to debit the task allowance, and you're also going to credit the task control. So remember these 4 accounts that are affected here. Okay, now let's start with what we are required to do. Now remember, here you are also required to do the notes to the balance sheet. So because you don't have enough time, what you can do, you can also start by entering this information. So remember, we know the format that when we do our thing, remember by now we know that when we do trade and other receivables, which we have trade debtors, and then we should also less provision for bad debt. So you read that less provision for bad debts. Okay, and then we know that this, if we're saying we're supposed to less it, it should be in bracket, then we would have net trade debtors. And then we also know that we're supposed to also include our prepaid expenses, and then we also supposed to include our accrued income. So this will make life easy for you. And then remember, here under trade and other payables, we also saying that we're supposed to have accrued expenses, and then also income received in advance, right? And then we are also going to have other things that we will get as we continue with that, but at least you should have an idea that these things are here. Now let's check from here what we have. We can start here. We have the debtors control of 31,900. This was already included for us. We have provision for bad debts. We know that we have to get the new balance. Bank balance, we know we're not going to use it. Creditors control 21,363. We also know that it has already been entered for us, so I'll focus in on the other adjustments. And then also, if we check the fixed deposit, it has already been recorded for us. Then we also have the loan account, which has also been recorded. So now what we do, we can then go to the adjustment. So here they've told us about a debtor who returns things. Remember, if a debtor returns things, I said that you will have the tax allowance, right? So which means this side in the income statement, we're supposed to have minus 1,600, and also in the debtors control, because we are saying that the debtors control must be credited, we must also subtract minus 1,600. And we must also remember that this has got to also affect our trading stock deficit or surplus calculation. So what is happening, we know that our trading stock, according to the information, we're supposed to get 42,563, right? But there was someone who brought back things, and this was not included in this because they had already sold those goods. So we're going to add back that 1,000 here, and then from there, once you are done, you will check what's your stock on hand. Our stock on hand, according to the information, is 44,000. Here they're saying a fiscal stock count on 30 June revealed the following to be on hand. This transaction will not affect our trading stock deficit or surplus calculation. So that's why I'm just going straight to it so that I don't forget, right? Now remember, they said that the stock on hand is actually 44,000. So this is what is actually available. The sum of this will give us 43,563. Then when we subtract 44,000, it will tell us how much more stock do we have. Why are we saying more? Because the adjustment figure is more than the figure from the record. So we say 43,563 minus 44,000, it will give us 437. But remember, this will be trading stock surplus because we have more stock available. So we say trading stock surplus here, trading stock surplus, and then you say for the 2,563 plus 1,000, and then you subtract that 44,000, then you'll be done with this. Remember, it gave us 437, then you get your 4 marks. Okay, but remember, because we don't have cost of sales here, that transaction, we will not be able to use the information there to get the cost of sales here because it's not known at the moment. So we'd have to apply the Cremora method after we have continued with some information that they will also give us. Now here they're saying that 80% of the trading stock was used during the, of the packing material was used during the, you simply go straight to your packing material and then you look for the 80%. If 80% was used, it means that your packing material, some of it was remaining. So if we say 13,500 multiply by 0.20, it will give us 2.7. So meaning that here we're supposed to subtract 2,700, and then if we say 13,500 times 0.80, it will give us the used amount, which is 10,800. And even if you say this minus this, it will give you this, then you get your around 3-4 marks. Okay, now let's go back to other transactions that can help us here. Now we have to come back to this one so that we don't forget. Here they're saying that the business prices its goods at a markup of 60% on cost, and then the trade discount of 4,000 was allowed on invoices to certain customers. Now remember, if you give customers a trade discount, they are not going to pay you the money that they were actually supposed to pay you before the trade discount. So this means that what you are going to collect from them for sales will not include the trade discount. But when you calculate your cost of sales is always at 100%. So meaning that if you were to use a markup to get that cost of sales, you'd have to take that trade discount and add it back so that you can calculate the accurate cost of sales. Okay, so if you look here, there's nothing else that's going to affect our sales, so we can just move with the information. Now here they're saying that they told us that the customers were given trade discount of 4,000, so we just need to get our accurate sales first. Okay, the net sales that we're supposed to get. So if we say 337,600, then we say minus 1.6 is going to give us 336,000. Then we put it here. Then you take this 336,000, because this one excludes the trade discount that you gave to customers, and add it to the trade discount. Then you multiply by 100 over 160. Remember, they said that our cost price is equals to 100%, our profit is equals to 60. So it makes sense that our selling price will be equals to 160. So in this way, you have the information. You just want the 100%. So we're going to take this plus this. It will give us 340,000. Okay, so if we say 340,000 multiply by 100 divided by 160, it will give us the actual cost of sales, which is 212,500. And then to get your gross profit, you can simply take your sales and then subtract the gross profit. Remember, to get gross profit, you're going to say 336,000, then you say minus 212,500, then you will get your cost of your gross profit, and then you get a mark for that. So let's do it. 336,000 minus 212,500, it is giving us 123,500, and then we are done with this part. You have around over 9 marks here just by the information that we have entered so far. Then you are done. Okay, then you can move on to the next transaction. Here they're saying that a check issued to a creditor for 1,900 settling our account of 2,000 was dishonored, meaning that it was rejected by the bank. It was the check did not go through simply because we had insufficient funds. This was referred to draw, meaning that there were no funds in that account. So what the creditor will do, they will cancel their discount. So in our books, we must also cancel the discount and add this account back to our creditors, because we still owe them money. So what we're going to do, we check the difference between the two. 1,900 minus 2,000 will give you 100 rand. So we would have to cancel the discount by subtracting 100 from the discount received here. So we subtract the 100 here, and then from there we add back the original debt of 2,000 to our creditors, because we still owe them. Remember, the check did not go through, so we'd say plus 2,000 here, and then you are done with that transaction. Next, they are saying that on 18 June 2020, 1,370 was received from M. Stuhlman, whose debt had been previously written off as irrecoverable, meaning that this person was written off as a bad debt, and then he managed to get some money and give us that money. So what are we supposed to do? Normally, we're supposed to record that as bad debt recovered in our books and also show that the money was received in the bank. But here they're saying that the amount was credited to the debtors control account in the general ledger. So instead of them crediting bad debt recovered, they credited the debtors control. So which means that we must take this to bad debt recovered and then add this back also to the debtors control. So we say in the income statement, our bad debt recovered will be 1,370. So you'd have bad debt recovered. Okay, then you'd have 1,370. Then you add this back to your debtors control because this has been excluded from the debtors control. So we say plus 1,370. Remember, they credited debtors control, so we must debit it to make corrections. Okay, next they are saying that provision for bad debts must be increased by 400. The moment you see that provision for bad debts increases, it means that provision for bad debts adjustment becomes an expense. Remember, they're saying that it must be increased by, so we say provision for bad debts bad debts adjustment, and then they say it must increase by 500. The by is the increase or decrease amount, 2 is the final amount. Okay, so because they say by, we bring it at the last column. Remember that the previous one was 550, right? So the new one will become 550 plus 950. Sorry, 550 plus 950, and then it will, what am I saying, 550 plus 400, sorry, then we'd have 950. So that if we say 950 minus 550, remember this is the new balance, the difference between the two, it's 400. So the new provision for bad debts in the note will be 950. So please be careful about that part. And this is a common transaction, also the first one that we did, and then also that one of the stocks on hand, they are also common, so you mostly have them. Okay, next they're saying that the insurance policy includes an annual premium of 3,000 which expires on 31 October. Now we need to check our financial period. Our financial period, according to here, ends on 30 June 2019, meaning it starts on 1 July 2020. It starts on 1 July 2019. Now for it, that one expires in October and we are ending in June, so we need to check how many months are we outside our financial period by. If you move from July, August, September, October, you'd have 4 months. So if we say 3,000, remember they said it's an annual premium, right? If they're saying annual premium, it means it's for 12 months. So we say 3,000 multiply by 4 divide by 12, and then it will give us 1,000. So this 1,000 was paid in advance. Okay, so we'd have to subtract that 1,000 of the insurance here minus 1,000. But we know that when we do this, we are crediting insurance. We have to debit something because of double entry, so we'll debit our prepaid expenses. That 1,000 will come here, then you're done. Okay, next they are saying that an office suit has been led to estate agent since 1 February 2019, and they're saying that the rent agreed upon was 15,600 for the first year at a 12% increase in the second year, made necessary adjustments. So now what you need to do here, you need to determine to look at your rent this way. Check how many months rent was 100%, how many months did it then increase to become 12%, 100% plus 12%. So remember here, because these people started from February, they rented from us from February 2019, right? Our year started in July. So if you check, their years are supposed to start from the year starting on 1 February, it's supposed to start on 1 Feb 2019 and then to 30 January 2020, right? So here's what we are looking for. Remember, they started from February, right? Our year starts on July. So if we start from July, we say we are going to check for the period from July to before increase. Ours starts here 1 July 2019. So from 1 July 2019 to 30 January 2020. Let's check how many months. That's July, August, September, October, November, December, January, February. So it's 1, 2, 3, 4, 5, 6, 7, 8. No, sorry, it's just before here. It's 7 months. So this one will not count because the increase is effective. So we'd have 7 terms here, right? But at least they gave us the amount for the year. So if we say 15,600 divide by 12, it will give us 1.3. So meaning that every month they were paying 1.3 before they increase, right? And then remember, from February, we also supposed to have the rent from the other part of the rent would come from, let's see here first. So 1.3 multiplied by 7, it is giving us 9,100. So remember, we also need to check from 1 February 2020 to 30 June. That's the rent that we were supposed to receive. We need to check how many months. So it's going to be February, March, April, May, June. So meaning that it is 5 months. So if we say 5 multiplied by, remember this one must now include the increase. So if we say 112 divided by 100 times 1.3, it will give you the inclusive amount. We are including 12% because we are looking for the amount that now includes that increase. So it is giving us 1,456. So 1,456 multiplied by 5 will give us 7,208. So the sum of these two is what we are actually supposed to receive. So if we check 9.1 plus 7,208, we were supposed to get 16,380. You must show your calculation somewhere. We were supposed to get 16,380 as our rent income here. Okay, so we were supposed to have 16,308. So you can see that something was received in advance. This is more than what we were supposed to receive. So let's check the difference. This answer minus 17,836 will give us that amount, which is 1456. So this 1456 is our income received in advance. Remember, we have credited rent income, then so we have debited the rent income, we must credit income received in advance also by 1456. Then we can move to the next adjustment. So here they are saying that the following details, okay, let me see if I did not jump anything. I saw something about depreciation. Okay, let's come back here. So now here they're saying the telephone account for June 2020 must still be paid. The moment they're saying that it must still be paid, we know that it is accrued, so we're supposed to increase it so that it can be equals to 12 months. So we'd say plus 230 on the telephone, and also go to accrued expenses and say to date. So here it will be to date. Okay, then we go to the next transaction, and here what they're saying. Here they're saying that on 30 December 2018, an amount of 10,000 was placed in a fixed deposit at 15% interest per annum. Interest for the last quarter is still receivable. Interest is not capitalized. Now, if you check this, next year when we start the year, it will start the year with us. So meaning that we will receive interest for the entire month. So here they're saying that we only received interest for 3 quarters. One for the last quarter is still outstanding. Now, the easiest way to do it is to just take this 1,125 and multiply it by 4/3 so that it can give you the total interest that you were supposed to receive. So 1125 multiplied by 4 divided by 3, it will give us the total interest that we were supposed to receive, which is 1500. Now, how much are we short here? You can also say 1125 plus the difference between the two. So the difference minus 1125, the difference is 375. So meaning that we are still owed 375. So we'll go back to our accrued incomes in trade and other receivables and say plus 375 here. Then you proceed to the next transaction. What are they saying? Depreciation for the year totaled to 23,475. You take it straight, you know it's an expense, so you come here, say depreciation, and you'd have 23,475. Then you're done, you get your free 1 mark. Okay, then we can continue here. They're saying that the following details of a new employee, D. Lawrence, were omitted. If they're saying they were omitted, it means they were not recorded. Okay, they're saying they were omitted from the salaries journal for June, so they were not included. So we need to check if the payments were made or not. So here they're saying the enterprise contributes to the UIF on a rent-to-rent basis. Very important. And they're saying also that no payments were made, so they still owe this person. So we know that whenever we have excluded an employee, we must record them by their gross salary, and we know that gross salary is the salary before deductions. So all these deductions are included in this. So now what are we going to do? We are going to take the gross salary and also the contributions. Here they're saying that the enterprise contributes 1% of the UIF. So 1% of 4.2 multiplied by 1 divided by 100, it will give us 42 rand. So if you look at this in the answer sheet, contributions and the salary have been separated. So we'd say plus 42 rand. We'd say only 42 rand here because the gross salary includes that deduction. So here we'd say plus 4.8. Okay, then we go to the other part that might affect this. Remember, you're also preparing the notes to the balance sheet, so you also have creditors for salaries here. Creditors for salaries. Remember, this is the amount that you're going to pay to this person. You're going to pay this person his or her net salary directly in the bank account. So we're supposed to only put the net salary. So we will deduct that 42 rand for UIF, deduct 150 for medical aid, and then also we'll also deduct the 840 for payee and give this person his or her net salary. Okay, so here we have our UIF. Remember, UIF, we're going to pay for the deductions plus the contribution, so it's going to be 84 rand here. And then medical, remember the medical aid was 150, and then pay as you earn was 840. So you need to separate this because they have their own accounts. Okay, they are not like combined. So remember, creditors for salaries is just net salary that you're going to pay to that person, so you don't put it at a gross salary. So 4.2 minus 150 minus 42 minus 840 will give us 3,168, and then from there you are done with this. Okay, now let's continue with the transaction. Here they're saying the loan statement showed you the following information. They gave you closing balance, which is 48,000, opening balance, which is 60,000, and they're saying the repayments for the year is 18,000. They want the interest that is capitalized. Remember, I told you that you must use that format. Either use a T account or you use the bottom up approach, closing balance minus closing balance plus repayments, and then minus your opening balance. So we can simply do our interest like that here so that we can end those marks. So remember, our closing balance, according to this, our closing balance is 48,000. So we're going to have that 48 6,000, and then plus, let's see what else are we seeing. Our repayments according to here, it's 18,000. So we say plus 18,000, and then we subtract the opening balance of 60,000. Then we'd have our interest expense. Interest expense must always be in brackets. So if we say 48,000 plus 18,000 and then subtract 60,000, it will give us our interest expense. It's giving us 6,000, so our interest expense will be 6,000 here. Then you are done. Okay, then we can go to the next set of information. Okay, so we are done with the adjustments. All you have to do is to just close this up. Okay, and remember, in the exam you don't have time, but I believe that right now we are currently running at around 30 minutes, and you can see that I'm already sticking to the time allocation even though I'm explaining to you. So I'll just close this off. So we have 500 here. We know that 600 minus 100 is 500, so let's add here so that we can get our totals. So remember, 16,380 plus 500 plus 437 and also plus 1,370 will give us 18,687. So we'd have 18,687. So this answer that we are getting here, if we add it to our 123,500, it will give us our gross operating income of 142,187. But please remember to verify your calculations. Let's do it again. 16,380 plus 500 plus 437 and also plus 1,370. It is giving us that answer that we got. So meaning we're fine. Plus 123,500. It is still giving that answer. So we find. So we know here that our operating expenses are supposed to be in brackets. So what we need to do is to close off just these small accounts that we have here. Okay. So remember here, 78,000 plus 4.2. Here it's supposed to be 4.2, not 4.8. 4.2. Okay. Let me maybe correct it. I don't know why I wrote 4.8. So remember, it's supposed to be 78,000 plus 4.2. So we have that 4.2 here for the gross salary. So let's do it quickly. So 78,000 plus 4.2 will give us 82,200. So we have that 82,200 here, and then 3,120 plus 42 rand would have 3,162 here, and then also here we'd have let's see, 4,120 minus 1,000, it's going to give us 3,120. So we'd have that 3,120 here, and then we'd have telephone also 2,350 plus 230. It is giving us 2,508, and then from there, what you do, you just add this and get the total. So let's do that quickly. 1,500 plus 1,618 plus 2,800 2,580 plus 2,850 plus 3,120 plus 10,800, sorry, 1,000, 1.5 plus 1,618 plus 2,580 plus, okay, this, okay, let's say the answer plus I forgot what I was AD. Let me do it slowly. 1.5 plus 1,618 plus 2,580 plus 2,850 plus 3,120 plus 10,800 plus 4,830 plus 82,200 plus 3,162 plus 400, and then also plus 23475. It is giving us 136535. Okay, so we have that 136535, and then from there we would get our operating profit. Operating profit will be this answer: 142,187 minus 136535. It will give us 5,141.87 minus 136535. It will give us 5652. So we'd get that 5652 here, and then we'd say plus this answer plus 1,500. It will give us 7,152. So 7,152. So 7,152 then minus 6,000 will give us the net profit, which is 1,152. Then you get closer to your 40, or exactly 40 marks. So the most important thing that they are going to check here is your principles. Remember, sometimes these income statements have some minor errors, so they will credit you if it's not your own mistake. Okay, then next you also go to close off your things. You don't just leave them hanging like this. So let's do our debtors control. 31,900 minus 1,600, and then plus 1,370. It is giving us 31670, right? And then this answer minus 950 will give us net trade debtors of 30,720. And then remember our prepaid expense, this 1,000 here, and then also the accrued income 375. Let's say it, and then plus 375. It will give us 32,000. It will give us 32,095. Then you get your 6 marks. You are done with it. You can then be able to finish the exam. And then next, you would also have you would have to close this off also. So the ones that were not adjusted, take them as they are, 1456, and then from here you'd have to have that 208. So you can see I'm already collecting marks without having to worry. So from there you take 21363 plus 2000. It will give you 23,363. Then you just have to totalize this. Okay, then you'll say this answer plus 280 plus 1456 plus 3168 plus 84 plus 150 plus 840. It will give you 29,291. Then you'll get your 879 marks, whatever that you have worked for, that's what you get. So this is how you simply do your income statement and also the notes to the balance sheet at the same time. Now I want to show you something in terms of the time allocation, so that you can see that I'm closer to the time target that they want us to adhere to. And remember, in my case, I'm explaining to you here, they're saying that you should complete this in 42 minutes. So let's see how I completed this while explaining to you. You can see I'm sticking to their time limit, so you need to practice how to stick to your time. And remember, for me, I'm explaining to you, but I'm sticking to the time limit. So please practice, guys. If you want me to personally assist you, you are more than welcome to book us using the details that are available in the description of this video. For now, please don't forget to subscribe to our YouTube channel and tell your friends to also tell their friends to tell friends of their friends to subscribe to this channel. Thank you so much. God bless you. Shalom.